Morning, Steve Fried in Chicago with the morning grain comments. Well, markets are mixed overnight with beans and corn a little bit higher, wheat a little bit lower. Stock market's up, and I think most of the net buying is because yesterday we saw that there was a phone call between U.S. and China trade negotiators talking about resuming trade talks to try to get through this phase one deal. Again, yesterday China was a buyer of corn, and it would certainly help prices if China came in and bought, let's say, 10, 15 million tons of corn, 10 to 15 million tons of soybeans. As far as China is concerned, their April imports of beans were a little under 7 million tons, and this was a little bit less than expected. Their May and June total should be like 21 million tons, and most of that from Brazil. That'll put them October through June a little under 70 million tons of imports, and it looks like the USDA accept number of 89 million tons may be a little bit low. So hopefully they'll come in and buy some US beans. Still, unless there's a weather problem, it may be hard for November beans to trade much above 870 and 890. As far as the corn is concerned, the market still is lower prices, lower volume, and not a lot of speculative buying interest because of the drop in demand, especially on the ethanol side. The margins have improved a little bit with the higher crude oil prices and lower corn prices, but we still need to see ethanol prices move higher to get into any type of positive margin and even talk about reopening some of the plants. So some people are suggesting that farmers increase or even clean up their 2019 corn sales at around the 324 area on July futures, and doubt if D's corn can trade much above 340 with an objective of something below $3 in the fall if there's not a weather problem. For the wheat market, we're kind of on hold here. We've taken some prices off because of some rains in Europe and the Black Sea, but Northern Hemisphere weather, Canada, U.S. Southern Plains, Europe, Black Sea all need to be normal, and in some cases maybe in the Southern Plains above normal as far as rainfall is concerned to meet some of the record numbers that some people are forecasting for world wheat crop. So the wheat market probably is on the defensive, in one, because of these high production estimates, and number two, that wheat demand is down because of the virus. So we'll be waiting for the USDA May 12th report, expected to show an increase in corn 19 and 20 and 20 and 21 carryout because of the drop in demand. And we'll just see how much they want to put in for demand for next year's soybeans and next year's wheat crop to see if they drop 2021 bean and wheat carryout from this year. Weather-wise, it's going to be cold in parts of the eastern Midwest. Again, we don't think it's going to have a big impact on corn, beans, or wheat that might be heading. And then there's another cold event Sunday and Monday that might be just a tad cooler than this one. So we have to watch these two weather events. But so far, we're not putting any weather premium in the markets because of these cold temps. After May 14th, we expect U.S. weather to be mostly normal, with normal rains and maybe normal to above temps, which should help crops. I hope everybody has a safe weekend. And these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.